Alright guys, my name is Shervin, welcome to my channel. In this video, I'm going to show you exactly how you can save a ton of money on your tax returns. Now, income taxes are one of the largest expenses most Canadians have every single year. Part of that is due to the fact that the tax rates are so high in this country, but also another part of it is that most people don't actually know how to avoid paying unnecessary taxes. In fact, most Canadians, when it comes to filling out their tax return forms, they usually just fill out whatever their income was that year, and that's pretty much it. They don't even look at anything else in those forms. And of course, what they don't know is that there are a ton of different ways to use those tax returns to save money on your taxes completely legally, which would in turn mean that you would either end up paying much lower in taxes or you would get a ton of money back from the government if you were actually overtaxed over the past year. Now, I know that taxes seem complicated and boring, and who wants to deal with all of that? But you know what's not boring? Getting a ton of money back from the government for free. And let me tell you, when that big fat check shows up at your doorsteps with your tax refunds, you're going to be glad that you took advantage of all the tax credits and deductions available to you. And of course, if you watch the end of this video, I'm going to walk you through all the different ways you can save on your income taxes, and I'm going to go into full detail on all of these. And I promise, whether you're someone who's extremely experienced in writing off taxes, or if you're someone who's just doing their taxes for the first time, there will be something new for everyone watching this video. And in fact, if you watch the end, I can almost guarantee there will be at least one new way that you can save on your taxes that you didn't know about before. And all that I ask for in return is that if you are new to my channel and you enjoy this video, make sure to smash the subscribe button down below and join the community. I make new videos about personal finance and investing on a regular basis. And by subscribing to the channel, you get to see all my new videos right as they come out. Also, if this video helps you save money on your taxes, then do me a favor and smash the like button down below for the YouTube algorithm. But now with that said, let's get right into it. Now, the first thing I have to say before we get into all the different credits and deductions is to make sure to fill out your tax returns by the due date and no later. In fact, a ton of Canadians end up paying a lot more on taxes than they have to just because they end up missing this deadline. So please, whatever you do, do not make this mistake. Don't pay a lot more on taxes than you have to. Just make sure to fill it out before the due date. But now with that said, let's talk about what deductibles actually are. Now, whatever income you earn every single year, you're going to be taxed on that income. But the way taxes work is that you're going to be taxed on the taxable portion of your income and not the non-taxable portion. Now, when you just earn your income, all of that money is taxable. But when you apply deductibles, it basically lowers the amount of money that is taxable by the government. For example, if you earned $100,000 in the past year, but you have $10,000 worth of deductibles, that means that you have a $90,000 taxable income. And of course, $10,000 of your income is a non-taxable income because it was deducted from the taxable portion. Now, there are many different deductibles that you can use to deduct the taxable portion of your income and thereby lowering your taxes in general. And of course, I'm going to go through all the different ways that you can do this so that you can cover all your bases. Now, the most popular way is by contributing to retirement accounts. Now, of course, the RRSP is the Registered Retirement Savings Plan and is a tax-sheltered retirement account. Now, basically, any deposits that you make into this account are deductible from your taxable income. So again, for example, if you earned $100,000 in the past year and you put $5,000 of that in an RRSP, that means that $95,000 of your income is taxable and the other $5,000 isn't. Now, this means that when you deposit $5,000 into your RRSP, you're not going to get taxed on those $5,000, which basically means that you get to keep somewhere around $1,000 to $2,000 more instead of paying in taxes. So you basically kill two birds with one stone. You get to keep the money in a retirement account and it's still part of your portfolio, but also at the same time, it's not taxable anymore. So you're going to save on the taxes. Another very popular deductible is donations. Now, basically, anytime you donate to a charity or some sort of a fundraising, you're going to be able to write that off against your taxable income. Now, of course, donations can't just be donations you make to your sister's bank account, right? It has to be a donation to a charitable cause. But as long as that's the case, you're going to be able to write that amount off and not pay taxes on that portion of your income. Now, another very interesting deductible is moving expenses. Now, if you've had to move for work or even for school in the past year, you can add up all the costs associated with that and you can write it all off against your taxable income. Now, depending on your particular situation, this could be quite a bit of change here that you can save by just writing this one off. So if you have moved in the past year, either for work or school, make sure to include this in your tax returns. You can also get tax credits for home office expenses. Basically, if you're someone who works from home instead of going into the office, you can get $2 worth of tax credits every day that you worked at home instead of going anywhere else. This is up to a maximum of $500 in tax credits per year. So basically, if you are someone who works from home full-time, just by making sure to include this in your tax returns, you get an additional $500 in tax refunds. So if you work remote, definitely make sure to include this and get $500 for free. Now, one thing to keep in mind with this one is that you shouldn't be receiving any other reimbursements from your work for working at home in order to be eligible for this credit. But as long as your work isn't paying you anything specifically just because you work at home instead of working at an office, you should qualify for this tax credit, so definitely use it. Now, if you have children, you can use that to lower your taxes as well. There's a special tax credit called childcare cost. And that basically says that if in the past year you had any children under the age of 16, you can claim this credit in order to lower your taxes. For those of you who have just bought your first home, there is a special tax credit just for that. You can get up to $5,000 off of your tax bill just because of this. And that's the home buyer's credit. You basically get $5,000 in tax credits just because you bought your first home in the past year. Of course, you can always deduct any capital losses that you have on your taxes. Capital losses basically refer to any time you lose money on your investments. And just to be clear, this is not when your investments go down in value. This is when you actually realize a loss. For example, if you buy a stock at, let's say, $1,000 and you sell the same stock at $500, that's a realized loss of $500. And let's say if you had 10 of these different 500 losses in different areas, you can add them all together, and that's $5,000 in capital losses this year. And by reporting that amount on your tax return, you basically deduct that amount from your taxable income, which again should help to lower your tax bill quite a bit. Now, many Canadian workers are also paying off their student loans at the same time, but there's one good thing about that, and that's the fact that you can actually use that to lower your taxes as well. Again, you can use your student loan payments to deduct from your taxable income and again pay less in taxes. But just to be clear though, you're only going to get that deduction on the interest that you're paying on those loans, not the actual principal. Now, if you are in school currently and you are working at the same time as well, you can also write off any tuition or expenses for education. So basically, if you're going to school and you're paying for that, if you're paying for books, if you're paying for other material that you need for your studies, you can write all of that off under education. And again, that should lower the amount of your income that is taxable. Now, if you have to pay any union fees or dues at the place that you work, again, all of those are deductible. Make sure to include that under union fees and professional dues, and you should be able to, again, lower your taxable income. If you invest in mutual funds, and of course, mutual funds have investment management fees, well, all those management fees are also deductible. Now, just one thing to keep in mind is that this only applies for non-sheltered accounts, because if it's in a sheltered account, it's not going to be involved with your taxes anyways. So if you have that investment in a non-sheltered account and you're paying the management fees, well, you can deduct that from your income taxes. Now, if you had any unfortunate medical mishaps in the past year and you had a lot of medical expenses, again, you can write all of that off against your tax bill. So again, any money that you had to pay out of pocket for your medical bills, you can write all of that off and lower that amount from your taxable income. If you have any spousal or child support payments, again, those are also tax deductible. I don't know how many divorced couples are watching this channel, but if there are some of you, just know that you can write off that child support payment from your taxes. Now, you can also deduct any interests that you pay on loans that are meant to bring you more income in the future. So for example, if you're taking out a loan in order to be able to buy a studio where you're going to produce a lot of content, then you can actually write off the amount that you're paying in the interest of that loan. The key element is that it has to be for a loan that is meant for income producing activities. Now, of course, this would also apply for a mortgage for a rental property, because again, a rental property, you're buying it to rent it out to produce income. So whatever interest you're paying on that mortgage, you can also deduct that from your tax bill as well. Now, interestingly enough, this also includes your primary residence. This is again because your primary residence is going to be an income producing asset in a way. You may not be renting it out for money, but it is likely going to be appreciating in value over time. And if you do end up selling the property in the future, it should generate some sort of an income for you. Now, this would only apply to your primary residence and not any other properties that you're not using to get income out of. But for your primary residence and your rental properties, you can write off all the interest rates that you're paying off for the mortgage. There are also some more specific credits, like for example, the exploration and development credit. This one basically says that you get a specific amount of tax credit if you invest into an energy company that is involved in exploration. Now, I know it's a bit of a weird one for me to mention, but I'm just trying to make a point that there is a lot of different specific ways where you can save on taxes. And again, all these different tax credits and deductibles that I went through are stuff that are available all across Canada. But there actually are a bunch more provincial and territorial ones that are specifically for each province or territory. Which is why on top of all the stuff that I went through in this video, I also encourage you to do some research and see what tax credits are available in your particular province. Just take a couple of minutes and do a quick Google search, see what is available, and seriously, just 10 minutes of research could save you thousands of dollars in taxes. And hey, even if you don't find anything specific for your own province, then you at least have all the stuff that I went through that you can use to lower your taxes. Now, in this video, I mostly went over all the ways that you can save on your taxes as an individual, but there is also another way to approach this. Particularly if you're someone who is self-employed or if you have a side hustle or something along those lines, then in that case, a very good idea would be to start a business and get incorporated. Because then in that scenario, you will be able to write off all your business expenses and again, lower the amount of money that is taxable from your income. Now, of course, how to get incorporated and how to use that to lower your taxes is a big topic that I'm going to cover in its own video. But of course, I want to know if you guys are interested in seeing that video or not. If you are, make sure to let me know in the comments down below. And of course, if there's enough requests for it, I will definitely make sure to get that video out for you guys as well. But in the meantime, make sure to use as many of these tax credits and deductions as you possibly can to lower your taxes. Do it all legally and honestly, of course. You don't want to get in trouble with anyone, but as long as you're doing it honestly, you should be perfectly fine. Again, these tax breaks and deductions are all completely legal and from the tax code. And as long as you report the numbers correctly, you should be absolutely fine with the CRA. So go for it, get as much tax rebates as you possibly can, and you're welcome. Now that's about it for this video. Hopefully you guys enjoyed that. If you haven't done so already, make sure to smash the subscribe button down below and join the community. Feel free to follow me on social media. I'm on Twitter and Instagram at Shervin House. As always, if you have any questions about any of the stuff that we talked about in this video, make sure to let me know in the comment section down below. I always respond to every single question that comes in. And as always, thank you guys so much for watching, and I will see you in the next video. Cheers.